Jimmy.
Now what's worth doing is worth doing for money.
Straight from y'all street to Wall Street.
Anybody tells you money's the root of all evil doesn't make up.
Dudes wake up, hope their girl turned on so they can get a little bit. Only woman in the morning I wanna turn on this Becky quick. While the average man looking at this sad like she fine as it. I'm over here looking at tails and whips like 5'6". I left the mayhem for the market. Now I don't want a dope spot, I want to stop it. I know that booty got dry, triggered my stop losses, but I ain't got time for your wop. My V-wops crossing. Rich with hot V's from pushing hot strategy and plans to make grand. Still in my wife beater, Batman pajamas, house slides, and about 5 hot picks for the day. Cause I like the way the Dow bounces. 4 hot dips on call, so I got options. 2 with a lot of volume, 1 with a double bottle. Now I know dumb money don't understand. Am I talking about my trade or just thinking with my MACD? You see, we different in the way we move. You move with kittens and your dog, I move with bears and wolves. I got a green thought, grow with the marijuana. Waking up with the fun, some commas. Jump out of bed, big profits. Eat my bacon and eggs, big profits. Light up, watching them candles, profits. While I'm still in my sand, making profits. They used to watch me move them packs and stop. Now I watch moves in the NASDAQ profits. Used to run from the ATF and them cops. Now I run down ETL, make profits. I jump out of bed, make profits. Eat my bacon and eggs, make profits. Light up, watching them candles, profits. While I'm still in my sand, making profits. See, me and Jim Cramer been talking mad money. Said today I'm taking a risk. They got the feds coming, but I got support here with me. I call a short squeeze. You get the drop, pull the trigger, and abort these. If she stay on my watch list, I might have to wife her. But I know better. I'm a true trading group lifer. Call up the Wolf of Weed Street. It's time to flip some profits. Go ahead, be hawking. Get your spot here. I'll double top that in the head and shoulders. Hit him up with this resistance. Watch him roll over. Cause I see John Wicks in contract. If I say I make $1 million a day, well, that's a large cap. You moving average, that's why you get crossed. Get split, get delisted, and knocked off. And I'm setting the whole block off. I'm buying GameStop and selling them roadblocks off. Jump out of bed, big profits. Eat my bacon and eggs, big profits. Light up, watching them candles, profits. While I'm still in my sand, making profits. They used to watch me move them packs and stop. Now I watch moves in the NASDAQ profits. Used to run from the ATF and them cops. Now I run down ETL. Hey, my family. Hey, go, what we doing, my man? Hey, make profits. Hey, Shug, Mike, what we doing? Hey, make profits. Yo, Wolf, Professor, what we doing? Hey, make profits.
That TTG money gang.
Hey, making profits.
We some snipers.
Hey, yo, what's up, everybody? What's going on, folks? Welcome to the True Trading Group live stream. My name is Michael Edward Parinati. I go by Michael Edward. I'm the co-founder and head trader at True Trading Group. In case you know, we were a Benzing and FinTech Awards finalists last year for Best Data Analysis Tool, but we're currently the fastest growing and highest rated premium online educational platform that combines university level trading and investing courses with premium stock market tools, live workshops, and individual mentorship and coaching for stocks, options, crypto, and futures. We day trade, we swing trade. We also cover long-term investing. There's literally something for everybody here at True Trading Group. If you're wondering who I am and why you should listen to anything it is that I have to say, it's because I didn't figure this stuff out on my own. I didn't have to sit in Discords. I didn't have to watch YouTube videos. I was trained by professionals on Wall Street. My first job right out of college, working at T3 Alpha Fund in New York City. They had me go through a training program before they let me touch $1 of the fund's money. It's where I learned how to trade. Then 2008 happened. Great recession, great financial crisis, big stock market crash, but also the same year that I received one of the firm's Trader of the Year awards. Now, fast forward, I'm the co-founder and head trader at TTG. Along with my team of 8 professional full-time trading mods and an over 30-person staff, we've helped thousands of members from all over the world to reach their goals. We actually have members in 117 different countries, over 10,000 members, truly a global community here at True Trading Group. So if you guys are ready to learn, trade, and profit for real, you've all come to the right place. 6 nights a week, we go live on this YouTube channel with myself, other mods, and even some special guests. We'll drop golden nuggets and give you free lessons, education, trade ideas, commentary to help you guys all become better traders. So if you've not yet done so, subscribe to the channel, smash that like button, turn on your notifications, make sure that you do not miss out on any of these live streams, because we're dropping golden nuggets on a regular basis. We give you guys a bunch of information. I'm not a Monday morning quarterback. I tell you exactly what I think is going to happen in the markets. I talked to you guys on Sunday evening. I told you exactly what I thought was going to happen this week. And what did I say that was going to happen this week? Not that I predicted anything that was going to happen today with Israel and Iran. And we're going to talk about that. We're going to talk about what that means for the overall markets. What does that mean for oil? What does it mean for the oil stocks? What's that mean for some of the defense stocks? I did make a move today in my long-term portfolio that we're going to sit here and talk about. Okay. We did make some moves today that we're going to talk about, but I told you guys on Sunday evening that I believe that the markets were set up for a little bit of a pullback this week. Not a major pullback, but just a pullback away from those all-time highs back into retest those prior support levels. I didn't think that we were going to have this whole situation with Israel and Iran, which is the reason why the market sold off this morning. So once that news kind of broke that there was a ballistic missile attack coming from Iran, it was imminent over the next couple hours. That happened right at the opening bell. I mean, literally right at the open, that news broke from the White House and also from Israel intelligence agencies kind of making that be known. Oil spiked. Oil shot back into the $70 a barrel range. So now oil back above 70. And you saw Chevron, Exxon, Occidental, oil stocks popped. You had INDO, small cap. That went crazy today. A lot of members jumped on INDO today inside of the THD chat. So there's a lot of different ways to play that news today. The best way to play it was the oil names. Chevron and Exxon to the upside early. And then if you like small caps, INDO to the upside early, tons of momentum there. But where does that trade go from here? Is there more room to the upside on that oil trade? Is what happened today in the Middle East, is this something that we need to be worried about? Is this something that could send the markets to the downside? I'm going to tell you guys exactly what my thoughts are there. But from a market standpoint, from where we sit here currently today, the SPY is still holding above a prior breakout level. You see here drawn on my screen this resistance level that we had prior to the Fed meeting. That is your prior all-time high resistance. That level got broken after the Fed meeting, and the Fed cut, and Jerome Powell and the Fed cut 50 basis points. Okay? So we broke through that, and now all we have done is pull back into that level, and that level is being tested, and that level so far is holding. You drop down into that level today, and you can see here, guys, that you were able to hold that level today, right? So as long as you're above, I say 564. So as long as you're above this 564, you're still looking for longs. Once you break underneath this level, then I think you need to switch things up and look for a little bit of a deeper pullback, because if this level does break, then I would say you probably have, if that level breaks, I would say that you probably see a little bit more of a deeper pullback as some profit taking kicks in and takes you back down into these major moving averages. The dark blue line is the 50-day. The pink line is the 100-day. And I would say that these two moving averages come right into this area to give you a nice little spot of support and then maintain the higher low trend that we have been seeing. And then you can bounce right into the pull into there, find support, and then try to bounce back to the upside from there. So that is kind of the price action that I would anticipate if you were to break underneath that 564. But so far you're above it. You know, today's situation in the Middle East was not enough to break that level. Today's job openings numbers we got were significantly stronger than what was expected. So there's a lot more job openings than anticipated. We had over 8 million job openings. It was expected to come in at 7.6 million. So, you know, 500,000 or so of more than 500,000 additional job openings than what was expected. And that just really continues to go into and solidify that soft landing argument. Every data point that you're going to get from here on out is going to be going to two different buckets. It's either, hey, is this a soft landing bucket or is this a recession bucket? But there's a new bucket. There's a new bucket that is going to come into play here with everything that we have going on. And I want you guys to be aware of this bucket because it's the bucket of stagflation. And with everything that we have going on right now in the world, it's a real possibility. So I'm not trying to be like a doomsdayer. I'm not a doomsdayer at all. If you've been following my channel for, the last couple of years, you know that I am anything but a doomsdayer. I believe that, everybody should always be invested in the markets. I believe all these, severe pullbacks or, pullbacks you get in the markets, I believe that they're buying opportunities. I myself personally have been taking advantage and I've been buying on those pullbacks very publicly, very openly. Members of True Trading Group know exactly what I buy, when I buy it. And I even come on this YouTube channel and I tell people from a long-term perspective, like when I'm buying stuff in my long-term portfolio, I'm very vocal about it. And I tell people what I'm buying. Like on August 5th, I came on here, I told everybody that I was buying on August 5th. It turned out to be a really great decision. I bought a lot of tech stocks. I bought Uber, I bought Palantir, I bought Kava, I bought CrowdStrike, Palo Alto, Microsoft, Meta, Alphabet, Amazon, NVIDIA, AMD. I bought all those names on August 5th. Now, those are names I already own. Those tech names I already own, just added to the positions when the markets were down on August 5th. So I've been anything but a doomsdayer. I think that the most probable situation, the probable outcome from everything that we have going on right now actually still is a soft landing. But there's so many things happening in the world today that are inflationary. And it's concerning. You have trillions of dollars of stimulus going into the Chinese economy. That's inflationary. You've got 36 ports affected and shut down across the eastern coast and the Gulf of Mexico. That is inflationary. If you have a prolonged strike at the ports, which the strike began today, if there's a prolonged strike and this goes on for months, you're going to see the cost of several different goods go up. You're going to see the cost of a lot of food items specifically go up. I don't really think electronics are going to be impacted all that much because electronics mostly come from Asia and all those products hit ports on the western coast. So you got to look at what is coming from Europe, what's coming from that part of the world. Those products are going to see an increase in cost because the only way for those products to now get here is to either make them go all the way around to a western port or air freight. Air freight is a lot more expensive than maritime freight. So if that's what's going to happen, then those companies are going to incur higher transportation costs, higher shipping costs, which then therefore means higher end costs to you, the consumer. Goods inflation is what has come down very sharply. Services inflation is what has been sticky. Services inflation has been sticky because the consumer has actually held up pretty well, because the economy's held up well, because the jobs market's held up well. Yes, it's cooling off, it's softening, yes, but it's held up pretty well. And that's why services have still been pretty sticky. But if you start to get an uptick in goods inflation and services inflation is sticky, and China's economy comes back online with trillions of dollars of stimulus, and you get an increased buying power from the Chinese consumer to add to the demand for some of these products that are going to be now cost more because of the port problem, and you're going to have scarcity on a lot of those different products because of the port problem, that's going to push the cost of those goods higher. China's economy coming back online could also lead to more oil consumption. China is the second largest consumer of oil in the world. So they're going to be, if their economy gets going, they're going to be consuming more oil. While tensions in the Middle East continue to expand and continue to accelerate, that could be inflationary on the price of oil, and that can push oil higher. All of this is happening while the Fed is cutting interest rates. So I think we really need to pay attention to, it's funny because if you asked me a week ago or 2 weeks ago, I would have told you that nobody cares about inflation anymore, that it's not even on the radar of the Federal Reserve, that it's all about the jobs market, it's all about the economy, that's all they care about, because inflation had come all the way down. You got a 2.5% CPI number. So you're right there near that 2% mark. PCE is already there. PPI is already there. CPI or core PCE is not there yet. Core CPI is not there yet. But from a headline number, you're at 2.5%. So inflation is well on its way to the 2% target. But then all of this stuff happened. Then China gets trillions of dollars of stimulus injected into it. Then the Fed cuts rates by 50 basis points instead of 25 basis points. Then the port shuts down. Then, war and tension in the Middle East, increase and accelerate and expand. All this happened within the last 1 to 2 weeks. And I think that those four things maybe individually would be meaningless. but collectively happening at the same time, those four things are inflationary. So we really need to pay attention to, I think, inflation reports, maybe not this month, maybe even not next month, but if this situation in the Middle East expands, if the port strike is prolonged, because we know the Fed's going to continue to cut, and we know the trillions of dollars are being injected into the Chinese economy. So those two things aren't going to change, right? The Fed's going to keep cutting, and China's economy is getting the stimulus. That's not changing. The things that might change or the variables here are, how long does this port strike last, and what happens in the Middle East? So just when you thought the news headlines and the fundamental catalysts are going to start to calm themselves down, just when you thought that was the case, here you go. Some black swan events that nobody really was talking about, like a port strike. Who had that on their bingo card for Q4 of 2024, right? Nobody. I didn't have that. I didn't think that was going to be happening, but yet here we are. And I got to tell you, I think the port strike is going to be something that is not going to be over soon. If you guys listen to the speech from the president of the ILA, the guy that heads up the longshoremen and represents the longshoremen, his speech that he gave about the strike did not sound to me like somebody that is ready to just give up soon and is ready to negotiate. It sounded like somebody that was literally holding the ports hostage and digging his heels into the ground and saying, we're not moving until you give us exactly what we want. I mean, he started saying things like, they can't last without us. We're going to get exactly what we want and what we deserve. They got shirts that say the docks are ours, the docks belong to us. And it's just like, that doesn't sound like somebody that is willing to move. They're demanding a 61.5% increase in pay, 61.5%. They were offered 50%, turned it down. First of all, 61.5% increase in pay is kind of crazy. But they were still, even with that being crazy, they were offered 50%. They declined it. They want a ban on all automated machinery. That I understand. They want to protect their job security for the future and their children's job security, because a longshoreman is a very family knit group, right? So it's like, if your father's, it's a very tough job to get into. You really kind of have to know somebody to get a job at the ports. It's a fantastic job. The guys do very well. A lot of them make over six figures. Crane operators, senior crane operators could push up to $300,000 a year. I mean, you're talking about a really, really great job, good benefits and everything else, but they want to make sure that stays that way. You got a lot of ports around the world. The ports on the West Coast have already started implementing automated machinery. Ports in China have already been implementing automated machinery where you don't necessarily need as many humans to operate and to load and unload and all these different things that go on at the port. A lot of it's becoming automated. And they're concerned about that. So they want guarantees that there's not going to be an implementation of automated machinery that's going to cause their jobs to go away. So that's a lot of what the strike is about. Plus, they want the 61.5% increase in pay. I don't know how close they are to an agreement on that, but it just didn't seem like that guy is willing to move at all. It's like, hey, give us what we want or else. So I think you got to start to prepare for a prolonged strike. You got to prepare for a prolonged strike. And going right into the holidays with the increased shipping and the increased freight that you have in the holidays, that's going to be tough. It's going to be tough. I know it could be inflationary. So that's why I'm saying I think we've got to start to get that stagflation bucket out. You asked me 2 weeks ago, I would have said stagflation is not even on the table. But with all these things that are happening, I am a little nervous that inflation begins to tick higher. So let's add a third bucket to the mix. All these data points that we get from here on out for the next 3 months as we roll out the end of 2024, all these data points go into one of those buckets. It's either a recession bucket, soft landing bucket, or stagflation bucket. So we got to start paying attention to the inflation numbers again, unfortunately. I'm excited for the day that we never have to talk about inflation, because inflation is a very ugly word. It's a very ugly thing. It destroys people. It destroys the value of your money. It destroys your purchasing power. It sucks. And it's also the hardest thing for the Fed to control. You would much rather have a recession than stagflation, because recessions are actually pretty easy to fix. Stagflation is very difficult to fix, because the solution for one problem is the ingredients for another. right? Stagflation is when you have high inflation with low economic growth. So it's like you have like a recessionary economy, but you have a rising inflation, which is not typically what you see, right? Usually inflation coincides with a booming economy, and, disinflation would associate with, a recession or a falling economy and asset prices falling. And in order to stop inflation, the Fed raises interest rates. But if you raise interest rates, that's going to further stunt economic growth, which is already suffering. But so then to fix economic growth and to spark economic activity, the Fed cuts interest rates. But by cutting interest rates, that helps push inflation higher. So the Fed gets caught between a rock and a hard place in the event of stagflation. That's why it is so bad of a situation. And that's the last thing that anybody wants to see. I'm not trying to scare anybody. I'm not trying to say that's the most common, or I'm not trying to say that's the most probable outcome. I'm not trying to say that's what I think is going to happen. I'm just saying I think it's something we got to start paying attention to. That's all. I still think soft landing is the most probable scenario, but you got to be real with what's on the table. And you got to be real what your options are. So you're ready for anything, and you're never blindsided. You're never shell shocked. You always have a plan regardless of what happens. Okay. So with that being said, let's talk about what happened today. Let's talk about what this means going forward. Before we do, we'll touch on Nike. Nike just reported earnings. The stock's not really doing much. So stock's not really doing much here after Nike reported earnings. It's first quarter revenue, 11.6 billion, down 10%. Compared to the prior year, was down 9% on a currency neutral basis. Fancy wording we don't really necessarily care about. Direct revenue is 4.7 billion, down 13%. Quarterly earnings of 70 cents a share, which beat analyst estimates of 52 cents a share. Quarterly sales, 11.59 billion. That missed analyst expectations of 11.65 billion. All right, so Nike beat on earnings per share, but they missed on sales. Stock is basically flat. No real movement here. You initially popped on the back of those earnings. You shot up there to $93, but then very quickly took it right back to 88. So you're right at basically where the market closed yesterday. So Nike yesterday closed at 88.30 cents. You're at 88.10 cents right now. So not really too much movement there on Nike, but they did miss on sales. All right, they did miss on sales, but China coming back online actually should probably be a positive thing for Nike. If you can get the Chinese consumer back online, that probably should be a good thing for Nike. But let's just focus on the charts. Let's not even think about what's going on here from a fundamental standpoint with this news. Let's focus on the charts. The reality here is you got this nice resistance over here in the low 90s, right? You got this nice resistance over here in the low 90s on Nike. You can see previous support, right? You got that huge gap down underneath it on prior earnings. And now you just ran up here and you got your earnings released now. And you tried to break through that resistance level and you just failed. You got right up to this yellow line, which is the 200-day moving average. And if we take a look at the 200-day moving average, the yellow line, every time that we interacted with it since that previous huge gap down there from December, you've had a resistance. And now here we are once again, topping up into that level and it's resistance again. So when you just, if you're just a technical trader, you just trade what the charts tell you, and the charts tell you that you have an absolute brick wall of resistance in the low 90s on Nike, and you popped up right into that zone and it became resistance. And that's it. Right? There you have it. So barring anything crazy on a conference call, I think that this pullback makes a whole lot of sense. And you have support at 85. So you have minor support at 87. You got heavier support at 85. And I would say, maybe the stock just settles right here in the mid 80s and there's not really too much else to talk about there for Nike. Okay. So those are my thoughts there with regards to Nike. Let's go back on over to the SPY and let's talk about Israel and Iran and the oil markets and everything else. Okay. So right off the open today, the market sold off hard on the back of that news. But what else happened was oil ripped, right? Oil ripped right off the open when that news broke. I mean, literally that news broke right at 9:30 about the imminent ballistic missile attack from Iran. So oil popped, Chevron popped, ExxonMobil popped, Occidental Petroleum popped, right? All your oil stocks popped and the SPY sold off. But then what happened once Iran actually carried out their attack, you got to pull back in the price of oil. So oil started to pull back. Now, I actually think today could possibly mark a peak fear moment in the markets with regards to oil and the Middle East. I mean, listen, I don't know what's going to happen. I'm not going to sit here and try to pretend like I can predict the future on whether or not there's going to be a direct war, declaration between Israel and Iran. I have no idea. I have no idea what's going to happen in that part of the world, right? All I know is things are escalating. Israeli troops crossed over the Lebanon border. So you have troops on the ground in Lebanon. They're continuing to carry out their operations in Gaza against Hamas. They're carrying out their operations against Hezbollah in Lebanon. You've got the Houthis that are, attacking, sending missiles from Yemen. And now you got Iran sending missiles from Iran. So there's a lot going on. But this is not the first time Iran sent missiles into Israel. They did this a few months ago after, the whole October 7th. And when Israel and Gaza, when that whole thing first started, that happened. And then it de-escalated pretty quickly. This attack was a little bit more severe. Some missiles did get through the Iron Dome. Israel says they're going to retaliate. What does that retaliation look like? I have no idea. I don't know. I don't pretend to know. But I do think that the spike in oil prices today, I don't know if you're going to get a continued move higher without there being any drastic acceleration of tensions in the Middle East. I feel like there was a lot of anxiety leading up to this attack today, and the markets were tanking and oil was ripping. And then the event happened and oil pulled back and then markets bounced. So I feel like that could have been a little bit of an unwind of like this morning anxiety of like, hey, this attack is coming. What's it going to be? What's it going to be? And the attack actually happened. And I think those fears subsided just a little bit because oil pulled back and the markets bounced. So I took advantage in my long-term portfolio today. Again, I tell you guys, whenever I make moves in my long-term portfolio, I always will notify people. I trimmed my aerospace and defense holdings today. So I own Lockheed Martin, Raytheon Technologies, and General Dynamics. I've owned those stocks for a couple of years. We put them in the stock market outlook report at the end of 2022 because the analysis on that was that, everything that happened with Russia and Ukraine, I thought that you would see a big increase in military and defense spending, not just from the United States, but also the U.S.'s allies over in Europe. And I thought that would bode well for Lockheed Martin, Raytheon, General Dynamics, the big players in the space. You also have Northrop Grumman, which I don't own NOC, but NOC is another one. But I own Lockheed Martin, I own Raytheon, RTX, and I own General Dynamics. These stocks have done extremely well over the last couple of years. Okay. I have a lot of gains on these names. They're not forever holds. And I'm just saying, hey, if this is the potential of peak fear and peak tension, you have this parabolic move here on Lockheed Martin. Let's take some profit. That's exactly what I did today. Okay. I took a little bit of profit off. I'm still long. I still own these names, right? I still own Lockheed Martin. I still own Raytheon Technologies. Raytheon Corporation, right? Raytheon. So I still own Raytheon. I still own General Dynamics. Okay. I still own them, but I did trim them. I did take some profit today and taking advantage of this big pop. And we'll see what ends up happening there. Okay. But I did trim some of that profit. Where is that money going to go? I don't know yet. I don't know yet what I'm going to do with the money that I just raised from those trims. I will certainly let you guys know though. I'll certainly let you guys know when I do make a decision with that, but position trimmed. Okay. Position trimmed on Lockheed Martin, Raytheon, and General Dynamics. All right. So I want to just make sure that everybody is fully aware of that. All right. So when we go back to oil, I have a real hard time figuring this one out, guys. I'm not going to lie to you. I come on these live streams and I tell you guys exactly what my thoughts are and I give you my detailed analysis, but I got to be completely honest with you. There's a real push-pull happening for the price of oil. There's a real push-pull. Tensions in the Middle East, that's a push, right? Push it higher. China's economy coming back online and consuming more oil, that's a push, pushing it higher. But other economies around the world are slowing, including ours. That's a pull. OPEC, and OPEC Plus, they've got their production actions, whether they're going to increase production, reduce production, that'll have an impact too. So that'll be more like a pull. I'm not quite sure what you're going to see, to be honest with you. I think that if the Middle East tension stops becoming a push, I think oil settles back down. I think it's more likely that oil trades in the $60 and $70 a barrel range than oil goes back to $85, $90, $100 a barrel. I don't think that's going to happen. I think the only way that you would see something like that happen is if there was like a severe all-out declaration of war between Iran and Israel and the United States got involved, and then maybe. But I don't think that's going to happen. You also have to realize that, Iran's oil production is a much smaller percentage of global oil production today than it was 10, 15, 20 years ago, right? The United States now produces 13 and change million barrels of oil a day, up from like 7 or 8 million barrels. So, when you take a look at global oil production, Iran only accounts for like 3%, I think it is. It's like anywhere from 2 to 4% of global oil production comes from Iran, not to mention all the sanctions that are placed on Iran. So I don't know how big of an impact it's really going to have. Like staying power, like oil going to $80, $85, $90 a barrel. I don't think it's going to happen. I don't. Because I don't think that you're going to see that much of an escalation of tensions between Israel and other countries. Yes, tensions are rising with Israel and these like terror cell organizations like Hamas, Hezbollah, right? But those aren't countries. So I think that will continue. That's going to keep going. That's going to accelerate. But tensions between Israel and Iran specifically, like directly, obviously Hezbollah and Hamas and the Houthis, they're backed by Iran. They're Iran proxy cells. Everybody knows it. But that's very different than country to country. So I think if you see a de-escalation, which is what you saw last time, I think oil settles back down. And I think oil's new home is between 60 and 80. So like trade in the 60s, trade in the 70s. I think that's oil's new home. And I think every time we drop into the 60s, United States is a buyer because the United States still has to fill the strategic petroleum reserves. So I think the United States will be a buyer in the 60s, and that keeps a nice floor of oil in the low 60s. But I just don't see there being enough of a catalyst or enough demand and lack of supply for oil to go back into like the $80s or $90 a barrel, which is a good thing because that would be highly inflationary, and we don't need that. We don't want to see energy prices go back up because then that means potentially CPI numbers and PPI numbers and everything else begins to go back up. You don't want that. Nobody wants that. So you guys, I know I'm kind of giving you a lot. I'm throwing a lot of information out here to you guys, but it's not that often where you have so many global macroeconomic instances that are happening that are all connected. They're all correlated. They're all connected. Okay. Happening there, it's connected to what's going on over here on the East Coast with the ports. It's connected. What's happening in, on the other side of the world in China with trillions of dollars of stimulus is connected to the Federal Reserve here in the United States cutting interest rates. All of these things are connected. They all impact one another. Even though they might not be directly correlated, they are indirectly correlated and they're indirectly connected because that's how global macroeconomics works. One thing on the other side of the world affects something all the way over here. And it's very important that you understand that correlation. You understand how those things work. So in True Trading Group, it's not even just about, hey, we're going to day trade this stock today, or we're going to trade NNE today, which is a big runner and a big move for a lot of big money maker for a lot of members in chat today. NNE, INDO, big runners today. A lot of our members are able to capitalize and make some really good money on those names today. But it's I'm also going to make sure that I always have these macro discussions with you, because I think it's very important for people to understand what drives market pricing, what drives investor sentiment. Okay. And understanding investor sentiment and understanding the macro picture can help you determine whether or not you think the markets are going to go up or the markets are going to go down, so you can be on the right side of a trade. You can take a look at a stock chart and anybody can give you an argument on why it's a good short or why it's a good long. There's always going to be an argument to be had for both sides. If there wasn't, then you wouldn't have a market. Someone thinks it's going up, someone thinks it's going down, someone's buying, someone's selling. So there's always an argument to be had either way. So how do you know which side of the trade to be on? How do you know if you want to go long? How do you know if you want to go short? Well, having a better understanding of the global macro picture and the overall sentiment of the market itself can help put you on the right side of that trade. And that's why I talk about all these things, not to ever get political. If there's a political discussion, we focus very hard to not include politics inside True Trading Group. We do have a zero tolerance policy in True Trading Group. I don't give a damn who you're voting for. You don't give a damn who I'm voting for. I could care two shits about what you think about Donald Trump. I can give two shits about what you think about Kamala Harris. I can give two shits about what you think about Joe Biden. I can give two shits about what you think about the Ukraine-Russia war. I do not care about your views on any of those things. Just like you do not care about my views on any of those things. All I care about is how can we make money from the things that are happening in the world that are completely out of our control. That's all I care about. True Trading Group is not the place to voice your opinions or emotions on those topics. It's a place to voice your plan on how to make money from them. Go to Facebook, go to Twitter, go to anywhere else to voice your opinions and your emotions on those matters. True Trading Group is only about what's your plan to make money from it. It's all we care about. It's all we will ever care about. Okay, so zero tolerance policy here inside the group for that. But these are things we care about. This is what we care about. We care about making money. We care about becoming better traders. We care about helping each other succeed in any market environment. We care about making sure that our traders and our members are well informed, are well educated, and are well prepared and are well armed, because we give them the best trading tools that this industry has to offer. We have negotiated deals with companies like Benzinga, the NASDAQ, TradingView, CBOE, OpenAI, right? We have named deals with these companies to put their products and their tools on our platform so that traders and our members don't have to pay for them. It saves our members thousands of dollars a year by having access to these tools once they join our community. You add that with the education that I received working at a fund in New York, which is what you get in the courses, and the guidance of 8 professional full-time trading moderators, including myself, that are with you every day, sharing their screens, answering questions, calling out trades, telling you where our orders are, what we're buying, what we're selling. That is the reason why our members are successful. That is the reason why we have over 10,000 members in 117 different countries. And when I say successful, I literally mean they're making money. And don't just believe me because I say that to be true. Believe it because they say it. Watch. Members of True Trading Group, do me a favor. Type the number 1 in chat right now. If you guys are making money, if you're becoming a better trader, go ahead, type the number 1 in chat right now. Now, anyone that's on here that's not a member of True Trading Group, if you're not a member, pay very close attention to how many people you're about to see type the number 1 right here on this side of the screen, because all of these people are exactly just like you. All these people were once in the exact position that you are in right now, which is sitting at home or in your car or in your office, on your phone, on your tablet, on your desktop, on your laptop, watching this live stream, looking for answers, trying to figure out how you can make money from this market. They were all once in your exact same position. Now they're making money. Cody Hill, I love you. Cody Hill just typed the date to make sure that everyone knows that they're not bots. Cody Hill put 10/1/24. We make money. So to make sure that there is no question, right? There is no question that these are not bots, right? Everyone just types the date, so everybody knows he types the date right there. Go ahead, members, type the date. What's today's date, members? What's today's date? You got to prove to everybody that you guys are not bots. Right? What's today's date? all my members, go ahead and type today's date inside of chat. That was really good, Cody. I like that. The next time that somebody like on the live stream who's like questioning us, the next time that someone says, oh, these are all bots, I'm going to ask you guys to type the date. Look at this. Look at all these people typing today's date. These are real people, folks. They're just like you. They have a full-time job, right? They've lost money in the markets before. Okay, they were scammed by some other group. 82% of our members have a full-time job. Do you understand that? 82% have a full-time job. I don't want to hear, oh, I'm back at work, I don't have time. BS. We have a mobile app that sends you push notifications when our moderators enter and exit positions. That way you can follow along with everything that we do, even if you're not in front of your computer. You don't need to sit in front of your computer all day, every day. I don't expect you to. If that was the case, we would have 2,000 members, not almost 11,000 members. People can do this while working a full-time job. They can. These people are all living proof of that. They are making money. You can too. You can too. Look at this. People are still typing the date. This is awesome. This is great. Everyone keeps typing the date. This is so funny. The best part is everyone types the date differently, right? Some people put 10/0 or 10/01, 10/1, 10-01, 10-1. Some people put 10/1/24. Some it's 10.1.24. Everyone's putting the date in a different. Oh, there you go. On the other side of the world, they put it's backwards for them. 1/10/2024. So that's the other way around. What is that? And that's European or Asian. I forgot. I don't know, because they do it the other way around. The date, the month, the year is the other way around. That's awesome. Yeah, Jimmy, Yankees, right? I'm going to the game on Saturday. I'm going to go to the game on Saturday. So game 1 of the ALDS. So that's going to be a good one. Anyway, needless to say, they're not bots. So anybody that's on this live stream, if you guys are not a member, what I want you to do right now is do yourself a favor. Be like these people. Go to ttgoffer.com right now. Again, that's ttgoffer.com right now. I got something real special for you. ttgoffer.com right now gives you access to our membership for a full year for just $500. But that's not the best part. The best part is if you're still skeptical, I'm going to remove that skepticism by offering you a double your money back guarantee based on your P&L. I'm literally dead serious. So our double your money back guarantee, it's right there on the checkout page. It's in black and white. Go read it. There it is. Boom. The way this works, you join today, you pay $500. Go through our courses, pass our quizzes, attend one study group. If you are unable to make enough winning trades after doing those things, if you're unable to make enough winning trades with us to equal the $500 membership fee that you paid at least one time, we're not just going to give you back $500. We're going to give you back $1,000. So double what you're paying to join. That's how serious we are about the platform that we've created. And that's how much that we believe in its ability to help you reach your goals. So all you have to do is go to ttgoffer.com. There's no coupon code needed, and just sign up and join. If you have any questions, you text us 1-888-621-2127. Again, that is 1-888-621-2127. The phone number is right down there at the bottom of the screen. If you have any questions, you have any concerns, you text that number. Okay, you text that number. We'll answer any questions that you guys have. Everything on that page is included. There is no upsell or additional cost or hidden fee for anything you read on ttgoffer.com. You get access to all of our courses, a simplified version of the stuff I learned working at the fund in New York, Benzinga Pro's real-time news feed, TradingView's premium charting software, the Trade Idea scanners on our platform for you to use, unusual options activity, options flow, dark pool data, 1,000 hours of workshops and a video library. I mean, you guys have access to all of this stuff for just $500 for the whole year. Now, there are other things you can pay for. We have like 6-month in-depth mentor programs, and we have mentor coaching sessions. We have 9-week accelerator programs. We have 2-day boot camps on the weekend. We do in-person meetups down in Miami. So there are other things that you could pay for if you want, but you don't have to. You get access to all this stuff, including your annual membership, for just $500. I started my own small account challenge with a separate account. I'm up 30% today with my PT Map trades. Hell yeah. So PT Map trades, that's our scalping group that's led by Gio, who is one of our professional trading moderators, who is a former market maker and has been on Wall Street for over 30 years. Okay. So Gio leads up the PT Map program. That is for scalpers. And he basically just scalps the ever living crap out of the SPY options every single day. And if any of you have gotten smoked trying to trade zero DTEs, you need to get in our TTG subgroup, says Douglas White. So yeah, so PTMap is a subgroup within True Trading Group where they strictly focus on scalping zero DTE options on the SPY. So congratulations, Douglas. Beautiful job, man. 30% today on your trades. And you started your own small account. That's absolutely awesome. Great job. Absolutely incredible. Glenn says, when I joined, I made my membership fee back in literally 2 days. 100% true, says Glenn Wilson. Glenn, I hope you're doing well, brother. Glad to see you. Glad to see you back on here. Glad to see you back in chat, man. All right. Yeah, Mari is crazy. Mari is crazy. So Mari is our TTG AI. That's our AI language model there, TTG Mari. That's our AI trading assistant that some of our members will have access to. It's the best in the business. It really is the best in the business. It has real-time data, real-time analysis. It's trained off of my teachings, and it identifies support, resistance, chart patterns, gives you triggers, gives you probability of outcome based on certain setups, can help you analyze, a piece of news or press release as soon as it hits in real time. It doesn't just go and scrape what's on the internet. This thing actually can go through and is actually trained off of our educational material and gives you real-time analysis with real-time data on options, futures, equities, whatever it is. So it really is the best thing that there is out there. It can even, set alerts and trades and everything for you. So it's sick. It really is. It gets to know you also. So like it'll ask you questions. It'll get to know you as a trader. Like what's your style? What's your risk tolerance? What are your strengths? What are your weaknesses? So it can start to recommend specific trade setups, specific trade strategies and trade ideas for you, specifically the individual. It's brilliant. It's amazing. I'm telling you right now, it's a real total game changer. You guys have access to that on our platform. So go to ttgoffer.com, guys. Again, you have the W money back guarantee. I don't think you need it, but it's there for peace of mind. So again, that's ttgoffer.com. Any questions, text us 1-888-621-2127. Okay. Yes, give Mari a Bloomberg terminal so we can take over the world. Yeah, that's the next thing. They got to implement a Bloomberg terminal into Mari. Oh man. Yeah, it's gonna be sick. That is gonna be sick. It's gonna be sick. I can't wait to see where this all goes. I really can. I'm really excited for the future of True Trading Group and the future of Mari and the AI tool. I really am. All right, so guys, there you kind of have. I gotta kind of keep the live stream a little short today. I have one of my mentor program sessions tonight, actually at 5:30. So anyone that's on this live stream, if you're part of my 6-month mentor program, we do have a training session tonight at 5:30. If you have not already received email text, you'll be receiving it very shortly in the next few minutes or so, where Adam's going to be sending out to you guys the information and the links that you need to enter the private room for the training session. So you guys can all head into there once you guys get the each. Just be on the lookout for the email and the text, and you guys could hop in and we'll start that up at 5:30. Okay. Anybody have any questions for me? Any questions for me, guys, on Iran, Israel, oil, the markets, jobs data, China, anything? And guys, also, it's important for you to know the price you pay when you join, guys. If you join today and you pay $500, then that's the price you pay for life, right? So at True Trading Group, whatever you pay when you join, you're grandfathering yourself in at that price point, right? You're grandfathering yourself into that price point. So if you pay $500 today, next year, it doesn't matter. Our membership could be $1,500. You'll only pay the $500 to renew your membership. Okay. So I want to make sure that everybody knows that. Still watching NNE for the squeezer? Absolutely, Brandon. Did you check this thing out today? Look at that candle today. That squeeze is back in play. So you're going to watch this thing for tomorrow for possibly a breakout. All right, so keep eyes there on NNE. If you get a gap up tomorrow, you look for 1650 support. So if there's a gap up tomorrow, okay, you look for dip buys into 1650, 17 dip buys, 1650, 17 dip buy with support around 16. All right. So that's what we'll be looking for there on NNE for tomorrow. So we're back up into that key resistance level for the break. All right. So that's what we're going to be looking for there on NNE. That is one that's on the list. We also talked about MicroStrategy. You know what? Here, let me go over some trades with you guys, because these are some things I talked to you guys about on previous live streams. So let's just give quick updates. We had a pullback in Bitcoin, which is what we talked about on Sunday. On Sunday, we said watch for pullbacks on Bitcoin. We said watch for pullbacks on Bitcoin on Sunday into the low 60s. And right now we are in the low 60s, between 60, 61K. So a nice little pullback there on Bitcoin. But this is the area that we want to, and then this is ARKB. I don't actually have the price of Bitcoin up right now. I just have ARKB up, whatever. But you're looking at this support level to hold. We're looking for like 60K to hold. Okay. We're looking at 60K to hold and see if Bitcoin bounces. If 60K holds, I'm going to get back into MicroStrategy long. I'm no longer in MicroStrategy. We damn near top ticked this freaking thing. We sold out at $177. The top is 179.5. And we got long at 147. So we literally caught from Monday to Friday. This was a trade last week. So if you guys are just joining me on the live stream today, then you obviously weren't here for this. But if you guys were with me last week, I told you guys I got long MicroStrategy for a swing on Monday. And we sold out of it. I mean, we took profits along the way, and we got flat on Friday at 177. And then we said, let's look for a pullback. Okay. And then you got it. So right now, the last 2 days, nice little pullback on MicroStrategy, and we can sit here and let that pullback happen. And if Bitcoin holds the low 60s, that gives you the reentry for potentially a continuation to the upside. But I need to see Bitcoin hold the low 60s. So we're going to keep a close eye there on Bitcoin, and maybe there's going to be an entry there for us on the re-entry on MicroStrategy. And then we got this NNE. We're looking for a breakout through that 1650-17 level, which we've been unable to do so far. We've tested it 4 times in the last month, unable to break it so far, but back into it. We'll see if maybe we break it tomorrow. That's NNE. Okay. So these are just a couple of trades that we've got on the watch list for you guys. My thoughts on DUO. I don't really have any, man. I'm just being honest with you. You've got a big resistance level here at $4, and then I guess that's it. You know, I mean, honestly, the only thing I can really say here, you take a look at this. I mean, this is, you know, this resistance level is real, right? This resistance level is pretty serious. We take out $4, it can squeeze. There's no resistance after $4, Nicola. There's nothing there after $4. You know, after that, all you have is this resistance all the way up at like $9, $9.50. Now, let me be very clear. I do not think DUO goes to $10, but this is the last level of resistance. It's $4. It's your last level. So if you take that out with big volume and you want to be a buyer back against 375, like you pop over 4, you go to 425. You pull back into 4, you take the long, and you look for support 350, 375 and see if you squeeze to 5.6. You can do that if you want. For some reason, I just don't trust this DUO. You've got a tremendous support level here at 250. You can see 1, 2, 3 times. You've tested 250, it's held. And you can see 1, 2, 3 times. You've tested $4 and it's held. So $4 resistance, 250 support. You can play that range, Nicola, until the range breaks. But I would say over $4, you got a chance of a short squeeze. Okay. Get it? Got it? Good. All right, folks. That wraps things up there for me. We're going to shut it down. All of my mentor session members, be on the lookout. Check your email and text messages over the next 20 minutes, as Adam will be sending you guys the link for the private session that is starting up at 5:30. So hopefully you guys have a better understanding of what's going on in the world. And at least now you know my thoughts on it. I still think that the bigger focal point this week is going to be the jobs data that we're getting. You're getting ADP employment number tomorrow morning at 8:15. You got jobless claims 8:30 on Thursday, and then you got the U.S. labor report at 8:30 on Friday. So that's going to really be the driving force. If the SPY gets back underneath 564, 565, I'm switching up the thought process. We're going to look for short setups if we get back underneath 564, 565. So then that will tell me we're going to look for shorts if we're underneath that level. All right. Right now, we're above it, 568.50. That's it, folks. I'll see you guys all later. My mentor session members, I'll see you guys in the group. If you guys are not members yet, go to ttgoffer.com. join us today. You have a W money back guarantee. I don't think you need it, but it's there for peace of mind. And of course, any questions you have, and I mean literally anything. You have any concerns, you have any doubts, text us. We are fully transparent. We are an open book. You will talk to a real person. His name is Joseph. Or you might get Luciano. They are both wonderful, young, strapping gentlemen that are eager to help you. So text them with any questions that you have. That's 1-888-621-2127. Thanks for tuning in tonight, guys. Subscribe to the channel. Smash that like button. Show some love.